Good morning, traders. Before we begin, remember there will be a short quiz at the end of this video based on what we cover today. So stay until the end to test your understanding of market structure. If you find these breakdowns useful, consider subscribing for daily XAUUSD analysis, where we focus on liquidity, inefficiencies, and structured price action rather than guessing market direction. Now let's talk about what happened in the market yesterday. Yesterday's daily candle printed was in what is known as an inside print, which is an important concept in price action. An inside day occurs when the entire candle trades within the range of the previous day's candle. In other words, yesterday's high did not break the previous day's high, and yesterday's low did not break the previous day's low. As you can see here, this wasn't able to break either. This usually signals market consolidation or compression, where the market pauses after a large move while participants wait for the next catalyst. Inside days often act like coiled spring. Price compressed inside the range, and once the range breaks out, volatility tends to expand. So today's focus is watching which side of the inside range liquidity gets taken first. Now let's break the chart down step by step. As usual, we first mark our previous day low and our previous day high. And you can see that the previous day's low has already been taken. This is your PDL and this is your PDH. These levels define the current daily trading range. Since yesterday printed an inside day, these levels become even more important. Markets that form inside days often target one side of the range before expanding in the opposite direction, because liquidity accumulates above the highs and below the lows. So today, both the buy side liquidity above the PDH and the sell side liquidity below PDL are important targets. Whichever side breaks first could set the tone for the next move. And as you can see that the market has already taken the PDL, we will now have to observe what it does. Next, we move to the daily time frame to check for any gaps, voids, or fair value gaps. These are areas represented by inefficient price delivery, where the market moved quickly and left behind imbalances. Markets often return to these areas later to rebalance price and complete unfinished business. Right now, the key observation is that price is still trading within a compressed structure, which aligns with the inside day concept. When compression occurs, it often means that the market is building energy before the next directional move. We can see that this old day imbalance has been acting like a strong resistance, and that is a SiBi, and you can see that it is also being supported by this day BC, which is acting as a support. So right now it's trapped between a support and a resistance. We now move on to the 4-hour chart. Since yesterday was pretty compressed, it is hard to find any imbalances. And you can see that there was one here, which was made on Tuesday, though it is not from yesterday. And the market has closed below it, which makes it void. The 4-hour time frame helps identify medium-term inefficiencies that institutions often watch. If price moves into one of these gaps, it often reacts because the market is rebalancing previous inefficient price action, which you can see here. These zones act as temporary support or resistance areas depending on the direction of the move. We now move on to the 1-hour, and let's zoom into 1-hour. You can see that there is a SiBi here, which the market traded into this morning. And as you know, SiBi stands for Sell-Side Imbalance, Buy-Side Inefficiency. A SiBi occurs when price moves aggressively downward, leaving an imbalance where sellers dominated the market, and trading activity was limited during this move. These zones often act like short-term resistance because when price revisits them, sellers may step back into the market. Right now, the 1-hour SiBi is effectively capping the upside and pushing price lower, which explains the current downward pressure. It pushed the market down to the PDL and it took the PDL out. Until the imbalance is fully mitigated or broken, it can continue to act as a ceiling for price movement. It can continue to push down while it's making a small retracement currently. If price rejects from the SiBi again, the market could continue lower towards a liquidity below. But if price breaks and closes above it, that would signal that the imbalance has been filled and the market may attempt to move higher. We now move on to our daily volume profile. As you know, a day starts. We first mark the previous day's volume profile. So Tuesday at 1800 hours until Wednesday at 1600 hours. This will help us mark a value area high as you know, this is the previous day's value area high. This is your POC, previous day's POC, and this is your previous day's value area low. The POC represents the price where the highest volume traded during the previous session, making it the market's perceived fair value. You can see that is pointing to 5188.213. When price moves away from this level, it often returns to it later as the market seeks balance. The value area high and the value area low represent the upper and lower boundaries where 70% of the trading volume occurred the previous day in this case. These levels are important because they often act as short-term support and resistance zones. So the key levels to watch today are the value area high at 5206.2, the POC at 5188.2, and the value area low at 5175. Please note that these are very close to psychological levels, which in this case would be 5200, 5200 and 5175. The market has already retested yesterday's value area low. Value area highs being near a psychological resistance level makes it an important zone to see whether market could face selling pressure. The point of control sits at another psychological level, which is closer to, it's between 175 and 200. So price may rotate around this or consolidate if it moves to this value. The value area low is an area sitting around the round psychological support level at 5175, which could attract liquidity and buyers if price moves lower. When volume profile levels align with psychological levels, the reaction from the market often becomes stronger because both technical and psychological factors are concentrated in the same area. Yesterday printed an inside day which signals market compression. The market is currently being pushed lower by the 1-hour sell-side imbalance acting as a short-term resistance. Also keep in mind, yesterday could have compressed because there was an important news driver, which was CPI, which was supposed to be released later in the day or early New York. So if price remains inside yesterday's range, we could see range-bound behavior. But once the market breaks that range, volatility could expand quickly, Stay patient, stay disciplined, and focus on how price reacts at liquidity levels rather than forcing trades. And before you go, please look into the quiz. Thanks for your time.